It's my pleasure to welcome you here to the Clark Howard Show, where our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. And speaking of financial decisions, when you're trying to decide what phone plan, TV streaming service, rewards card to get, anything like that, remember, we have put in great effort and expense into developing easy-to-use tools at Clark.com that drill down to your exact personal situation for you to figure out the best rate and best service for you to be with. And I'm really, really proud of these tools that we continually refine from feedback from you to make them even more precise so that you can let us do the work behind the scenes to make it easy for you to make the best decision for your wallet. And today, I'm going back to basics. I'm going to try to address something that has come in so scattershot, but steadily more questions about, should you use a robo-advisor, or should you invest on your own, or should you use a financial advisor, financial planner? And I'm going to try to help you. These are not ironclad choices, but give you a sense of direction how you pick. Also, I hate rent control. I hate it, I hate it, I hate it. And when you hear my reasons, you might still be mad at me, but I got proof that the market may actually lower rents when you don't have rent control in that market. So let's talk being the Lone Ranger, paying for advice, or paying for advice from a human when you're investing. A lot of people find investing boring, intimidating, or just a hassle. So a lot of people starting out will ask me, should they hire a person? Should they hire somebody to get them investing? And my answer pretty much always is no. That a financial advisor, financial planner becomes very important later in life. Is you're assessing whether you are on track, you've saved enough money to be financially independent. They're very important in dealing with later in life issues in terms of estate planning. Or if someone may be facing the possibility as they get older of maybe some diminished mental capacity, or just needing a checkup to see how you're doing midway through building up security for your life. But when you're starting out, the basics of investing are so simple that I don't believe you need a professional guiding you. But if just the whole thing overwhelms you, there's this thing that's grown over the last 10 years, robo-advising, where you pay a small fee and answer a bunch of questions, and a computer program, a robot basically, will advise, hey, you should put your money in this, this, and this. And you put the money in there, and it'll usually be a mix of index funds or more commonly exchange-traded funds, which are like a sibling of index funds. Or it may have you go in a target retirement fund inside a retirement account like a 401k or a Roth IRA. And so the robo is a great way if you feel kind of stuck. You don't know how to start to do. And a robo can be very valuable early to mid-career, making sure that your money is wisely allocated in, if you're doing an investment account or you're in retirement accounts of various types. So you get the mix of money right. The risk and the long-term reward are correct if the whole thing just confuses, intimidates, or bores you. So the robo-advisors are so inexpensive, you're adding a little cost into the system, a little sand in the gears, but not a lot. The financial planner, as I mentioned, generally later in life, and as a general rule, figure it's going to be 1% of the money they manage for you. But you don't even have to do that. You can hire, more and more common now, you can hire a financial planner who you pay a fee to, like you'd pay a lawyer or an accountant, and have a checkup from them. They don't actively manage your investments typically, but you're paying them for looking at what you're doing, suggesting to you what you need to do differently. And you got to be somewhat of a self-starter in that environment. But that way you're paying somebody for completely unbiased advice. And remember this, if you do find you need that person who you're paying to manage your assets for you, they gotta be a fiduciary. Gotta be. That means that legally they are bound to do what's in your best interests. And be wary of anybody who is an insurance person, because odds are about 99.9% they're not a fiduciary. And every recommendation comes back to selling you some ultra high cost insurance product or annuity. Know the distinction with the difference. If you do decide you want that advice from a human, they got to be a fiduciary, period.
Okay. This question came in from Will in Ohio. I was considering a side gig, and Stripe was the only payment option. I looked at the Better Business Bureau website for them and noticed they have hundreds of recent complaints filed. I don't feel comfortable doing business with a company that has such a poor reputation, especially for financial transactions. What are your feelings on using Stripe as a payment service?
This one's a tough one for me to answer because Stripe does a huge number of transactions out there. And a lot of times Stripe is the payment option that will be available to you. And I guess that's not an option if that's the mandatory choice.
We actually have a vendor that will only pay us that way.
Only pay us. And have we ever had a problem?
We have not.
And so Stripe, if you look at the Better Business Bureau, their consumer reviews are 1 out of 5 stars. And this is an interesting one because they're Better Business Bureau ratings an A+, and they're a participating member. So my guess is the only time anybody, because most people have never heard of them, that somebody files a complaint about them is when they've had a problem. Nobody goes there and says, hey, these people were great. That's not going to happen. So it's not been a systemic thing that's come on our radar that people are having a problem with Stripe. And gosh, you'll say, okay, I'll try it. And then sure enough, you'll have a problem. But hopefully you won't. And they have never, I'm going to say never, been a source of complaints to us or to our team, Clark Consumer Action Center, that I'm aware of.
Ron in Wisconsin says, my brother and I have been renting out our parents' condominium ever since their passing 13 years ago. We each own half the condo and share the income equally. My brother got a notice from his tax preparer recently that we will be required to register with the federal government BOI, Beneficial Ownership Information Report. I looked at the government site, but it's asking for our business name. We never had a business name or considered it a business per se. We have a good renter and will probably sell the property if and when they decide to move. We've always split the income from the property and reported it annually on our tax filings. Do we have to file with the federal government? We have until January 1st of 2025, as I understand it. It seems like we're so small they wouldn't be interested in it. It's supposed to prevent money laundering or track it. We're renting a 2-bedroom, 1,200 square foot condo for $1,250 a month.
Wow. People would like that rent, wouldn't they? Mm-hmm. Okay, so first of all, Ron, this has been so confusing to people, I can't even stand it. So the Congress came up with this weird tool, this BOI, and I had to do it for our corporate entities. And it's a lot of busy work. I don't know what ever happens with the busy work I did. But yes, it's to find out who's behind the scenes. So, because a lot of legitimate or seemingly legitimate businesses have always been used for money laundering, for underworld activities, drug smugglers, drug dealers, all of that. And so the registration does not take very long. I may be mistaken. I thought it was only for people who have an LLC or a corporate entity. I wasn't familiar with sole proprietors, which is kind of where you and your brother would come, because it doesn't sound like you have an LLC. And I have to defer to your accountant. I would ask if you go back and look at the BOI website and see if I'm wrong, if it doesn't just say LLCs and corporate entities. And if it does say that, as I recall, then I'd ask your accountant again, do you really want me to do this, because we're not either of these? But this is something, if you do own a company, either as an LLC or corporation, do the busy work. It's pretty simple, and it'll get the government out of your hair later about this.
All right, this one came in from Lloyd in Georgia. I've been talking to a lady on TikTok, and she was telling me about investing in Bitcoin. Her name is Charlotte, and she is asking me, well, he said the last name, asking me to send her $300, and she'll invest it for me in Bitcoin. My wife says it's a scam and says they're just going to take my money. I just want your take on this. If you were going to invest in Bitcoin, how would you do it?
Well, Lloyd, I certainly wouldn't do this, and your wife is right. This is totally bogus. This is a classic, typical Bitcoin scam thing. And don't talk to Charlotte anymore, which is probably not even her real name. And I would stay away from it. Just block this person on. Can you block people on TikTok?
Yes.
Okay.
I believe so.
We're talking about
showing my age. Yeah. Yeah, I'm sure. Just don't talk to Charlotte.
Yeah, Charlotte's done in your life. Period. If you do want to invest in Bitcoin, it is getting easier to invest on your own through recognized exchanges. I'm not a big fan of crypto or Bitcoin, so you don't hear me talk about it. Crypto, the idea, the underlying thing of Bitcoin as of crypto is something that so far has not matured to a point that I see it as something to recommend. The idea of electronic bookkeeping is essentially part of what it's about, and that is something that's definitely part of our future. But at this point, crypto is still a very high-risk speculation. Even Bitcoin, even though people can show me how it's gone from this to that, it's still not investing. It is not an investment even today. Coming up ahead, I can't stand rent control. And all over the country, there's noise about having rents controlled by government on apartments and rental homes. Wow, I hate this. And I'm going to tell you why what seems like relief to renters isn't relief at all. Okay, I've said it now. This will be the third time since we started this podcast I've said I hate rent control. Okay, so let me explain why I hate it so much. Rent control completely distorts a market to the point where it limits housing supply in a community. And in the United States, an obvious reaction in people and the politicians who've been told they got to do something about rising rents because rents went crazy for several years, is we got to stop this. And so politicians are like, hey, we got to deliver for the voters. So now in more and more places, they want to do rent control, or they're implementing rent control. And what that means is that if I own a place and I'm a landlord, I don't get to decide what the rent's going to be, even if my taxes on the property go up, my maintenance costs go up, the repairs go up. What I can charge in rent is capped. And there may be an adjustment where I can raise it so much per year. And I was reading a story 3 weeks ago in the New York Times. It was about a couple that lives in Brooklyn, the borough of Brooklyn, New York. And their rent, they've been in the same apartment for decades. Their rent is $300 and some odd a month on a 2-bedroom apartment. And their neighbors, they feel so lucky because their neighbors around them in non-rent control buildings are paying many, many thousands a month for an equivalent apartment. When they go see their friends, they're paying thousands a month. But they're paying $300. It's not equitable. It's not right. It violates fairness, and it reduces the supply of housing. Because if I'm a landlord and I'm thinking of buying another property, or I'm, a developer, I'm thinking of building a place, and I have no idea if I'm going to be able to earn a return on my money, even in a free market. But if I have to worry about the government telling me what I can charge in rent, I'm not going to commit that money to build a place. And if you go to cities with rent control laws, you'll see people aren't building new housing. So the supply, maybe the rent control makes it great for like that couple in Brooklyn, but everybody else pays more and gets less for it. Now, I want to give an example that got a lot of media coverage over the last couple of months. Argentina, which had had a completely government-controlled economy and thus went from being a society 90 years ago that was as wealthy or wealthier than the United States, and now is dirt poor because of government interference in the economy. Argentina eliminated rent control. And at first, landlords went crazy raising rents. And then what happened next is rent started falling and falling because suddenly housing that had not been available to rent went on the rental market. And now there's incentive for people to come in and build more housing because the country's short of housing because nobody would build it. I mean, things that look good in the short term have the law of unintended consequences. Not an actual law, but just the way it plays out. And rent control is one of those things that you need to provide incentives that somebody puts their money at risk. A lot of times people have this sense that things just appear in magic. That, hey, we should have more housing over here. Boom, it's there. Doesn't work that way. You need to have incentives where someone has a reasonable marketplace incentive that they think they're going to make money and they put their money at risk. And if you don't have that incentive, gosh, we got a problem. And you don't solve things like a housing shortage in a day. There are a lot of steps to making housing more available of all types, for purchase, for rent, more affordable. And we've got things we can do that will free up the marketplace more. We're not doing in the United States. But I'll tell you, rent control is a shortcut to disaster. And it's just to me, it's a fact. To you, it may be a wrong opinion. Krista?
All right. Doug in Arizona says, I have a 20-year term life policy. There will be an upcoming option with this policy. It states this term life insurance has the option to convert the base term policy to a product without evidence of insurability. What should I expect with this option to convert? Will I be able to extend my current term insurance, or will it be some other insurance product?
Okay, what a wonderful question. So, Doug, the most common conversion is to what they call permanent, into a whole life policy. That's a whole different math. Because a whole life policy has a savings account to it and the life insurance. And the cost per month or per year or per quarter, however you're paying, will go through the roof. There's also occasionally an ability for you to convert to what's known as ART, annual renewable term, which means every year, based on mortality risk, but without a medical exam, you can continue the coverage for whatever amount, but the premium will escalate each year because you're 1 year closer to the actuarial tables saying you're going to die. So who benefits from a policy with conversion without evidence of insurability, as it's called? Someone whose health has declined over the period of time that you've owned the policy, and you'll no longer medically underwrite to continue insurance. And in that case, taking the option to convert becomes a very good, viable option, even though the insurance will be a lot more expensive. But if your health is good at the time that a policy is coming to the end of its life, that's when you want to go through medical underwriting and see if you can qualify for a new level term policy for the period you need to insure, 10, 15, 20, 30 years, whatever that is. And even if you're worried about your health, see if you can qualify for a new policy through medical underwriting. If you do, case closed. If you can't, then you look at doing the more expensive conversion without a medical process.
Douglas in Texas says, my parents are retired and have been fortunate to save plenty for retirement. We're doing estate planning now while they're still alive and of sound mind. We're forecasting a significant inheritance after their passing. When meeting with estate planning attorneys, they are getting billed at $700 an hour. I think this is an absolute robbery, and even if they do live and the attorneys reside in California, it just seems so excessive. Is this normal? Where and how can I shop to find better rates and verify the attorney is top-notch? By the way, the attorney bills at $700 and the admin bills at $350. If you send them an email to say that it should be filed in your folder, that 30-minute action cost me $160 plus.
Absolutely.
Yeah.
Okay, so let me tell you the deal. Attorneys who practice corporate law for big corporations charge, as best I know, the highest rate per hour. The second highest rate that I'm aware of is estate planning lawyers. So these lawyers are being paid for specialty expertise, not routine kind of stuff. They're being paid for people of great means trying to reduce taxes today or reduce taxes in the future for heirs, doing extreme exotic estate planning. If your parents' stuff is more basic, you don't want to be at one of the firms where they serve you a cup of coffee with crystal and silver trays and all that, like the big expensive firms do that do estate planning. You want to be with someone who is a sole practitioner whose expertise is estate planning, who usually used to work for one of the big law firms and now has gone off on their own. So with estate planning, you want a lawyer whose expertise is in that area, But unless we're dealing with enormous family wealth,
I think it is. You said significant double-digit inheritance in the original.
so
email.
in a double, in that
I'm
case,
assuming that means double-digit in the millions.
if it's double digit, if we're talking 10, 20, 30, 50, 60 million dollars, pay the fees.
Yeah.
Pay them, because the money you're paying versus the expertise available in one of those fancy firms doesn't make the coffee taste any better being served on china on a silver platter, but the expertise is so good typically in those firms that you just absorb that. It's a success tax, if you will.
And you can find reviews of attorneys online too.
So you can, if you want to really dig and find an attorney in the county or area they live in California, who is really well credentialed, having worked in estate law for a good period of time, worked for one of the big fancy firms, and decided that wasn't for them, and they went out on their own, hung their own shingle, then absolutely you can do that, and it will bill at a meaningfully lower rate per hour. And you might not have the junk fee for putting an email in a folder.
Jason in Florida says, can you offer an opinion on GoodtoGo Mobile's $60 per year for talk, text, and 1 gig of data?
So GoodtoGo is not a company that we have reviewed. We do deep reviews on various smaller cell phone carriers, what are known as MVNOs, mobile virtual network operators, which means they buy wholesale capacity from other companies and then they market their own cell phone service. If you look online, the reviews of GoodtoGo are very mixed. There are others that charge an equivalent $5 to $10 a month, $60 to $120 a year, with a modest amount of data involved. And we have reviews of some of those at Clark.com. I tried one of these $5 a month ones for a while, and the review of that is on Clark.com, and I found them to I had no problems at all and haven't been able to find records of problems, and we have that review for you at Clark.com. But what's significant, I want you to think about this. This is a cell phone provider charging per year what Verizon, AT&T, Mobile usually charge per month. Now, the data is not equivalent, but the point is the cell phone industry is going through a parting of the Red Sea that is clear as all get out. That the 3 brand name cell phone providers, AT&T, Verizon, and T-Mobile, have been pushing their rates higher and higher and higher for people who need the comfort of that brand name. At the same time, other providers have been getting cheaper and cheaper and cheaper, and that's their claim to fame. I switched, was it last year or earlier this year? I switched to another provider, in my case, Google Fi, because I travel so much outside the country, and it is costing me much less than our prior T-Mobile service, and I've been very, very happy with the service with Google Fi, for someone who travels internationally. And then you've got, from the 3 brand name cell phone providers, Verizon, AT&T, T-Mobile, AT&T and T-Mobile, all now have their own discount brands. And you're on the same networks, but at a far, far lower cost per month. Or you can go with the independents that buy the wholesale capacity. And in every case, when you compare apples to apples, the prices are far, far cheaper with the discounters owned by the big 3 and by the independents than they are when you have your service with any of the big 3. So Jason, I like how you're looking, but as far as GoodtoGo, I'd say the jury's still out because the customer reviews are so mixed on it at this time. And speaking of time, we're out of time on today's podcast. And I want to thank you so much for joining us today on, this is Veterans Day, and I didn't even mention it. Have I lost my mind? How did I not mention that today is Veterans Day? Because I woke up thinking about it. And I want to thank all those who served our great nation, serve our great nation today, and in advance thank those who do in the future. You know, we face so many threats in the world, as we always do, and it is such a wonderful thing you do for this great nation when you choose to serve. And I thank you for that. Know that if you are serving in the military or are a veteran, we put a lot of effort every time this year making sure that our guide to discounts and services and things vets and active duty people need to know, and that's available to you at clark.com. Have a great rest of your day, and we'll be at your service tomorrow.